All right. All right. All right. 8:30. 8:31. 8:31. Good morning, guys. 8:31. Welcome in, everybody. How is everybody doing? Happy Wednesday. Good morning, guys. Welcome in. It's a new day. New levels. Pascal, Laron, Javier, Wes, Express, welcome to Express. Chuck, welcome in. Welcome in, Chuck. Blanche, Tony, Jay, Aiden. Welcome in, everybody. How's everybody doing? Good morning, guys. Spliff, welcome in, Spliff. Yvette, Seven Figure, Swanee, Pascal. Pascal, seen you twice. Fancy's here this morning. Fancy is here this morning. Good morning, Fancy. Welcome in, everybody. Welcome in. Everybody's sleeping today. Where is everybody? Come on, let's go. We need some more. We need more life. Everyone's like chat super tired today. There we are. Okay, now we're starting to pick up. Okay, welcome in, everybody. Happy Wednesday. FOMC session today. Yesterday's session quite nice. Actually presented some good opportunities. I didn't catch anything open bell, but I did catch a little bit of a scalp yesterday. Pennies, right? Made a little bit of money, a little bit of a scalper, but nothing crazy. If you guys remember what we spoke about in the pre-market yesterday, just kind of caught a little level of 562. That was it. Nothing big. This week has not been anything big. It's been 10 percenters, 15 percenters, that type of deal, right? Prior to FOMC, which obviously is today's session, everything prior to FOMC is quite ranged, right? Even the contract movement is going to be quite ranged, but this is what you'd expect. And actually, yesterday's session was quite readable price action. Okay, welcome in, everybody. Happy Wednesday, May the 7th. 600 people here this morning. It's 8:33. Let's dive into it. So we're gonna jump right into it. So today's session, we're gonna talk about SPY. We're gonna talk about the levels on SPY's chart, the major 562 level, the 566 colossal supply, and the 555 demand below. We'll talk about the overall range in the market. And we're going to talk about what the market needs to do for more upside and what the market needs to do for more downside. We're going to talk about the ES chart, and we're going to talk about ES in the eyes of this 5,700 level. This is the level to watch out for. This was the rejection spot yesterday. It's the rejection spot today. We're still going to discuss these levels. 566 SPY, 562 SPY, 555 SPY. Big levels. And again, they all correlate to our massive levels on the ES chart. We are going to talk a little bit about the QQQ chart. We'll talk about Qs. We'll go over what's going on the QQQ chart, 485, 492, and 475. We'll talk about Tesla. Tesla consolidating above demand here, 272, but under big level here, 280. We'll talk about Nvidia, major 115 level, major 112 level. What's going to happen now? What are we looking for? What's going to happen here on this NVDA chart, right? So a lot to go over on this morning session. We are going to go over a lot of different things. I'm opening up a new tab over here so I wanted to look at the Fed stuff with you guys so you can get a idea what's going on. Fed numbers, futures on interest rates. We'll take a look at the numbers and see what the Fed watch is, but it's quite simple today, and I'll show you a little bit of some numbers today. We'll flash some numbers here on the screen. We'll talk a little bit about what's going on with the interest rate. So a lot of different charts, but I want to dive into our economic data first. We'll go into our Fed stuff, and then we'll go back into our charts. So let's dive into it. Let's start off with our earnings reports. So today's session on the earnings reports, yesterday we had SMCI, we had AMD, we had Rivian. We're going to go over all those stocks this morning. Pre-market, we have Uber, we have Walt Disney. Disney's actually opening a new park in I think Abu Dhabi. I think it's Abu Dhabi. Don't quote me on that one. It's somewhere in the Middle East, but they're opening a new park in the Middle East. NVO, obviously reporting earnings in the pre-market session as well. We'll take a look at all 6 of these stocks. SMCI, AMD, Rivian, Uber, Disney, NVO. Right? In the after hours today's session, we have AppLovin, right? I don't know if I was trading AppLovin. We have Carvana, ARM. Pre-market tomorrow, we have Peloton, Piton, Shopify, Coinbase, etc. We'll dive into this as we go on. But guys, the big thing, the central focus of today's session is on the FOMC announcement today at 2 p.m. Eastern Standard Time. I am not an economist, right? And I don't want to make this session about being an economist. It's not what this is about. I'm here for technicals and technicals only. But I will show you guys numbers, and I'm not going to give any analysis or any indication of sentiment off these numbers. I'm just going to talk about it. Today's session, we have the target rate probabilities for the May 7, 2025 Fed meeting. What the expectations are pretty much a 99% chance of being unchanged. Nothing is anticipated to happen today's session of change. Now, even for June session is split. So what matters more about this Fed meeting that is occurring today at 2 p.m. Eastern Standard Time is really not the 2 p.m. meeting. It's actually the 2:30 press conference, because the 2:30 press conference is going to be when we have people asking Jerome Powell questions about what is going on with June. Are we expecting to see that June rate cut? Right now, you're seeing a 69.4% chance of no rate cut in June and a 30.3% chance of a 0.25 base or 25 basis point reduction in June. So you do have a small chance of a rate reduction, and this is being priced in the market. Of course, July, that's when we have a much higher chance of that reduction. So what matters more about this meeting is really forward looking. It's about what's going on in June. Okay, so I wanted to show you guys this chart. Again, I'm not here for the economy. I'm here for technicals. That is why I'm here this morning. That's why I'm here every single morning at 8:30. Let's talk about the charts. Let's talk about the first chart of the day. It's going to be SPY, right? We have 820 people here this morning. Jetson, thank you very much, Jetson. You're awesome. That is very kind of you. Absolutely did not have to do that, but that's very kind of you, Jetson. Thank you very much. Let's dive into it. So, SPY's chart. What did we say yesterday about SPY? Let's first talk about yesterday's session on SPY, right? And then that's going to help us kind of get a read today's session. So yesterday's session, we said, hey, we expect the market to stay in range. Look for reversion plays off lows. Look for reversion plays off of highs. That's what our main focal point was yesterday's session. Now, yesterday, what did we do? We pulled back close to the demand, but not quite into demand. We were quite a bit away, at least $1 away from our demand zone. We ripped off our demand pretty much early on in the session after some 10 o'clock data. 10 o'clock data came in, and we ripped up off demand. We moved from demand lows to supply highs, and we gave a rejection here at the 562 previous day low. This was the rejection spot that we had spoken about yesterday at 8:30 a.m. We also talked about on live trading, we talked about the idea after we hopped off live somewhere in this consolidation. We said, hey, one of the best shorts today's session is going to be a break, a look above, and a fail below, right? And that's kind of what happened here. You saw a break, a look above, and a fail below. That's what occurred yesterday's session, and that's where you saw a little bit of some downside move into the close on our Tuesday afternoon, right? And I caught a little bit of the scalp. I didn't really catch much because I don't really love trading too much into close like this, especially when I'm on the go. So for me, this was not much of a big trade yesterday. But again, what happened, right? And I'm not talking about my trade. I'm talking about the levels. What happened was we rejected off supply, right? We rejected off of a major supply zone, and we saw us stay in range. Now, today's session, you see a little bit of some excitement coming in the after hours, Tuesday morning, right? Or Tuesday afternoon. And then pre-market, you're seeing us fail right back below 562, right? So a little excitement and failure right back below 562. The question becomes, what levels do we use today? Because yesterday was all about 562 and was all about 555. Today's session, it's going to be about the larger channel. The larger channel, because again, this is an FOMC session. The larger channel is going to look like this. Let's go to the 1 hour time frame for a second, and you're going to see exactly what I'm talking about. The larger channel is between these demand lows here at 555. That stays the same. Nothing's changed from our demand. Our demand is still the same, 555. The supply is 566. This is our major supply. So if you want to have a trade zone today, this is the trade zone. The orange box is the trade zone. If we can get above 566, we are entering an uptrending market, in which case we already are uptrending, by the way, but we were entering a stronger uptrending market for a move higher back into 575. This would be a post-FOMC trade, a break and hold above 566 for calls, because if we do, we should see upside back into 575. Likewise, if we break down under 555 today, under 555, which I think is 5600 ES, we should see that downside move back into 544 and potentially lower. Today's session is simply about the channel high and the channel low, but the larger channel high and the same channel low, right? That's what today's session is all about going into our FOMC. So look for longs above the 566, look for shorts under 555. If you break under 555, short back down into 550, short back down into 544. Those are the big two levels to watch out for going into our FOMC session. Now, before our FOMC sessions, that's like kind of post FOMC, right? Before our FOMC session, if you want to get real aggressive today, what you're going to do is you're going to look to see, can we set up trades off of the same levels from yesterday? The same levels from yesterday were what, right? Where was this? Let's look for a 555 reversion play. If we pull back to demand, long demand prior to FOMC, because we don't expect the market to really see a big move prior to FOMC, right? So longing back into a key demand zone is not a bad idea, right? As long as the demand is holding, of course. Likewise, we can also look to see how we respond to 562 today. Before FOMC, before the 2 p.m. announcement today, if you see a little bit of a break and fail, you can go short there and have a risk to find at highs or the pre-market high, right? That could be a solid play today. I know it's a little bit aggressive. Yesterday, I loved the 562 failure. Today's session, I still do, but it's not as beautiful as it was yesterday. I would look for us to pop, form a pre-market high around 563. If we do that, we can define a risk short and look for a move down lower back into 561 and beyond, right? That would be a good short today. Likewise, if we do see this happen before FOMC, like if we see us break and hold above 563 today, which is our pre-market high, then we probably just do a little bit of a zombie grind today back into our supply zone before FOMC, which would be kind of tricky action because again, this is still supply here at 566, and I don't really expect us to see much of an upside move above 566. So the levels today are pretty simple. It's just 561 intraday pivot, 555 key technical demand, and 566 major technical supply. Okay, so with that being said, let's move on. I want to go over other charts. The first chart of the day is second chart of the day, ES. On the ES chart, you can see what I was talking about yesterday. We trended higher into supply here. This is the rejection spot that we had spoken about yesterday in the pre-market session at probably 8:33 a.m., right? We saw a downside move off 56.58. This level has not been adjusted. It's kind of funny how these levels work perfectly. Look how perfect this is. If you've ever seen anybody say, hey, I don't believe in technical analysis, you can show them a chart like this, right? Look at this, a previous day low at 8:50 a.m. on that Monday session, turning into resistance on Tuesday. That's the most perfect scenario, right? Big downside move first scenario, big break, and then look above and fail back under 56.58, and that's where the big downside move came in back into lower day, right? So nice day yesterday prior to FOMC. The question is today, do they give us nice action today's session, right? What we're watching for today's session is we're going to look for the same thing. Do we see something like this happen today? Do we see us break and fail below 562 SPY, which in this case would be 56.58? Yes. Maybe form a pre-market high here at 56.67. If that happens, that could be a good short trade, right? This is your short trade today's session. This is your long trade today's session, right? That's your long trade if you pull back to that demand zone below 5,600 ES. If the market just trends higher today, I mean, the uptrending day scenario would be if we break above this high right here. So I do want to make it clear though, yesterday I was more inclined to us staying within channel, right? Within this channel right here. There is a small potential that we do break and hold above 56.68, which is that pre-market high, and we do see a trend today. But the trend, in my opinion, only goes as high as here because that's your big technical supply. So I'm kind of talking about a lot of ideas today, and I know the guy who said I was confusing yesterday, they're going to be going crazy today because this is a little bit confusing. But what I would say is this. Watch and see how we respond to this zone here, right? The zone is this, right? I'm just gonna make it easy for us now. This is our zone, 56.57 to 56.68. On the ES chart, that's about a $10 channel here, right? If you see us fail off this channel, that's your short trade today for a downside play. If you see us break and hold above this channel high here, which is 56.68, that's where I think you can get trendy today, and we can see a little bit of an upside grind back into that 5,700. But again, only back in 57 because I don't really expect much of a massive channel break today going before FOMC, right? Now, post FOMC, obviously, this all changes, but this is what I'm expecting. And to kind of bring this back into SPY and to tie it all together with a nice bow, you can see that what I would look for today's session is I would look to see, hey, are we under this low pre-market high? Are we under this 562 area? If we are, that's your short side trade, right? We can look for shorts in the supply for a downside move. That's your first trade today. If you see us break and hold above this level, then upside back into that 566. But again, only back into 566 because that's our big technical level above us. Okay, so let's move on, guys. Let's go over the QQQ chart. On the Q's chart, it all comes back down to 485. What did we say yesterday about the QQQ? We said, hey, watch this. Even yesterday on live trading, we mentioned this. We said, listen, SPY's in supply, but QQQ has a little bit more room. It has room into 485. Look at this level here in QQQ. It's such an important level. Today's session, you should be focusing on this level today, right? This should be your pivot. You don't really want to be longing the open if we're below 45. That's a really important idea here. This is a potential rejection area, and we could see that little grind down lower back into our technical demand below 475 if we can't get above 45. If we can get above 45, expect us to move higher back into our after hours highs, 47, and possibly even our Monday's highs, 489. That's the next big level here. And what I'll do here, just to make it simple for us now, is I'm going to chart this out, right? 489 as our Monday's highs. That's a level I'm going to have added here on my chart, right? If we can maintain 45, we should see that trend day back into 49. If we lose 45, which we are pre-market, we move back into the lows of yesterday's session, 478, 478.50, and then potentially beyond 475, right? And the channel here on the QQQ is this, right? This is the channel, guys. This is the channel. It's between 489 and 475. That's the larger channel here on the QQQ. Okay, Jay saying short everything. I don't know if we can short everything yet, right? But I do see rejections, right? I do see supply rejections. It just depends how we respond to supply today, guys. That's what matters. Yes, the chart is literally the same as SPY. Yes, that's exactly right, Spliff. That's exactly right. Okay, so we have 1,100 people here this morning, and we have a measly 385 likes. Let's get the likes up, guys. We are going to move into our charts. Let's go now. Let's go over Nvidia. So Nvidia yesterday, right? I think this was a nice chart yesterday. Look, I didn't really trade this. I'll be honest, right? This is not a chart I traded. I always would tell you guys what I trade, what I didn't trade. This is something I didn't trade. Could I have done this? I probably could have, right? I probably could have traded this. I could have taken a piece of this yesterday. We had a good break retest under 112. That was probably nice. And then I wasn't really watching downside yesterday on Nvidia. I was only watching this 110 area for long side trades. 110 held really well. Remember we said yesterday, if you're looking for sneaky longs, you're looking for longs back at this band here, right? The band between 112 and 110. And we pretty much maintained that level perfectly. And so we maintained the level perfectly. But again, it was kind of difficult to take longs here off the open. It was a very aggressive sell right into 110.70. It looked like we were going to break down. So this was not an easy long yesterday. And I never want to tell you guys what's an easy long, what's not an easy long. This was not an easy long yesterday. But what's more important now is this. On the 15-minute time frame, on the 1 hour time frame, the same idea that we had spoken about yesterday in the pre-market session was the fact that we are still maintaining our level here at 110.70, 110.80. We are holding our technical demand, right? And we can see here we have a beautiful base formed. You can see these previous highs here from Friday's highs, April the 25th highs, turning into a series of lows here now as demand here at 110, 110.70. Today's session, I think that this consolidation is a setup that can be played in both directions, right? Either above 115 or below demand lows. But I would say from a technical standpoint, we are more sided bullish here. The reason why we are more sided bullish here is because of something called structure analysis, right? You can see we have a level here, a low here, a low here, a low here, a low here, and yesterday's session we formed a low there. So today, what I would watch out for is this. We are bullish, and this is our factor, right? Let's just write this out properly. We are bullish as long as we are above 112. Okay, so the reason why we are bullish as long as we're above 112 is because we formed a low here off that after hours low, right, at 112. We formed a recent low there, a swing low here. So if you're going to trade Nvidia today, you're going to do exactly this. Your main focus, and this should be your main focus, in my opinion, my main focus, is a break and hold above 115. If you break 115, I think you move higher back into 120. That's the key thing today's session. The key thing about today's session is above these previous highs, above these set of highs, we should see a nice move back into this set of highs over here. Does this trade happen prior to FOMC? I don't know. That's the question, right? I don't even know for myself. I don't know if it's going to happen prior to FOMC. I hope it does because I would absolutely love this. But we don't exactly know yet, right? If this loses 112, we know that it's going back into 110, 110.70, 110. That's our demand zone below. So if you are going to trade the short side today on Nvidia, if you're watching shorts, you're looking for a sneaky structure break here on Nvidia, it really can only be if 112 breaks, right? Under 112 for puts back into 110.70, which is our Tuesday's lows, 110.70, 110. Or you can look for a nice trend-based entry above 115 for upside back in 120. Again, I don't know if this is going to happen before FOMC. I just don't know, right? If I were to tell you guys this, if anybody is going to tell you what's going to happen before FOMC, you should click the X button and say, hey, I don't want to listen to this guy ever again, right? Don't listen to that. I don't know what's going to happen here. All I know is technicals. 115, upside back to 120, 112, downside back to 110, okay? And with that, we are now going to move on to our next chip of the day. Let's go over AMD. AMD. Earnings on AMD, right? A little bit of a whim-wham, right? A little bit of a whim-wham here in AMD. Up, down. What does this mean going forward? It means nothing, guys. It means nothing. If you look at AMD, and let's pretend they didn't report earnings. And you know what? Let's do this, right? Replay mode. Look at AMD yesterday, double topping off supply yesterday. You can see we broke down, we pulled back into 99.5, downside, 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 right? 99.5 being that critical level of supply. Now, in the after hour session, they reported earnings, and in a flip, you see big upside, big downside, but where the stock has sort of settled here now, where the crumbles where everything is settled, right? Where things have begun to settle, is we are settling above 99.5. Now, as much as we want to look at this chart and say this is a shit zone consolidation, right? I still would give emphasis to what's happening here. These highs, these set of highs, turning into a low here in the pre-market session, right? If we are above 99.5 today, this is an upside facing chart, and we can look for longs back at 102. That's an important idea here, right? This, even though it looks horrible, it looks terrible, it looks awful, right? I can tell us that we can still see we are above these set of highs here, right? These set of highs turning into a bullish consolidation in the pre-market session. That's important, right? Above 99.5, bullish, look for longs back into 102. Below 99.5, downside back into 98. That's your downside move back into 98, okay? Let's move on, guys. Let's go over the next chip of the day. Let's go over SMH. Let's do semi. Semiconductor ETF here, SMH 1218 is the level now. God, this is the level we have to break. I hope we break it because I want my Nvidia equity to get out of the woods. It needs to get out of the woods. I need to see it back in the very green now. But 218 obviously has to break here. If 218 can break, that's where upside comes in the SMH. Back into those highs, back into these highs here, 220.6, and then back into these highs here, 232.50. Right. So SMH still finding struggle to supply though. You can still see there is some struggle here. This is a struggle zone in the SMH, and it is having trouble breaking it. Okay. On the Avgo chart, Avgo holding above 200. That's bullish. At this point, what are you doing in Avgo? You're probably looking to see if we can maintain 200. If we do, back into 212. Okay, let's move on, guys. Let's go over the next ticker of the day. Let's go over Apple. Apple 202, right? 202 is your level here in Apple, guys. I mean, this is what you're doing today in Apple. If this can reclaim 202, 202, 202, look for a hold about 202 for longs. That's your upside trade. And then in complete stark contrast, if we fail 202 today, downside back into 198.50. So everything that's going to happen here in Apple is going to be determined by this 202 level. Remember 202 how important it was? 202, 202, 202. Okay, 202 is going to make a big move. In fact, I would expect either 198.50 or 207 today after FOMC. I would expect nothing different than that, right? It's got to be above 202 after FOMC, back into 207. This could be a really nice long trade today. Or under this 202, which we are technically under right now in the pre-market session, back into 198.5, in which case is a downside move. So this is what I'd watch today, right? Is how we respond to 202 today. Yes, Tavin, we're gonna go over Amazon. I definitely just butchered your name, but that's okay. Amazon chart. Amazon 192, right? I mean, this is the level. Supply here. Fancy's back at it again, guys. Fancy's back at it again. Thank you very much, Fancy. Yes, we'll take a look at NDX. That's NASDAQ, right? That's NASDAQ. We'll take a look at NDX. 193, you can see, I want to adjust these highs properly, right? You can see 193. Let's make this level proper, right? Let's do this the right way. 193, 180, 15-minute time frame, 1 hour time frame. And here's Amazon, right? I mean, ask yourself this. Is Amazon saying, is this chart speaking to us right now and saying, I'm all in at 931, right? I'm all in here, right? 931, we're in the middle of the channel, right? We are in the, look at this, right? We are in the precise midpoint of a channel high and a channel low. This chart is not screaming to me, I'm all in at 931, right? This just chart is telling me what? It's telling me let's wait for a break and hold above 193, right? Back into that 200 level, and then obviously look for 180, right? Under 180 for puts back into lows, right? For me, though, this is the midpoint. This is the exact midpoint, right? The precise midpoint, the median, the mode, whatever you want to call it, right? I would not mess with the zone. I would look for longs above 193 or shorts back under 180. Let's go over next ticker. Let's go over Tesla. We'll go over Tesla, then we'll go over some tickers you guys are watching. We'll start off with NDX. Tesla 280, right? Tesla 280, you can see 280 upside above 280, back into highs here. Demand is here at 272. We knew that though. This is big technical demand. I think if you're going to trade Tesla today, you're going to do so either above 280 for long side back to 288.50, and then possibly 293. You can see here, I want to get like micro now. Let's get to the micro chart here, the micro time frame. The micro time frame here, which is just the 5-minute, fancy way for 5-minute. But above 280, you have a level here at 283, okay, 283.50. And then above that is 288. And above that is obviously these highs over here around 293. So if you're trading Tesla today, what I would watch out for is this. I would look to see, can we get a break and hold above that 280 today? If we do, I would expect upside back into 283.50 and potentially beyond that. But I do know this is an area to watch out for, okay? 283.50. You can sit here. What I'm actually going to do is I'm going to change something too, because there's things that need to be adjusted here in Tesla's chart, right? And you can see it, right? And we can do this live, right? You can see here, we have supply between these 283.50 all the way to that opening print here from that Monday session, 285. So this has turned into a little bit of an extra level of supply, right? You can see there's obviously a level here. So what I'd watch out for today is if I'm trading Tesla, I would look for this. I would look for a break and hold above 280, in which case I would expect long side trades, but only as far as this 283.50, 285, right? Again, that's my supply here we have on Tesla's chart. If we see downside today, the downside really does not come in here, right? Because if you came in yesterday's session on Tuesday and said, you know what, we are at 273, I think we're going to go lower in Tesla because I don't like Elon Musk, whatever it is, right? That was the wrong idea. Doesn't matter. We need to wait for this to clear under 270, 250. If it can do it, we can look for that retest here of that Tuesday's lows, turn into resistance, and the downside move can come in, right? So if you're looking for shorts, that's your downside move. If you're looking for longs, that's your upside move. That's all it is here in Tesla, guys. That's all it is, right? Let's not get fancy here. Let's not get let's not get crazy. Above 280 for long side, below 270, 250 for downside. Let's move on. Okay, let's go over PLTR. PLTR 110. 110 fading, right? I spoke a little bit about this yesterday. We said you don't really want to be long PLTR, right? Why? Because why don't you want to be long PLTR? Let's talk about that for a second. The reason why is because we are rejecting here. Well, we're rejecting off of a level that's not a small level. This failure here at 125 is not a small level rejection, right? That's why coming into yesterday's session, we said pre-market here. We said right here, hey, I don't really want to long this 110. It's level here, but I don't really want to long that 110. I would look for longs back at 104.99. The reason why is because what was going on yesterday, Monday morning, was we were seeing a failure here of big technical supply, right? Go to the 4-hour, and you're going to see a double top here off the 125 level. I think that this chart could see some similar downside to what happened here back in late February into March. And so my expectations here on PLTR is going to be this. I think the most logical scenario here is we stay away long side until we pull. Now, I'm not saying short either. I mean, if you're going to short, you're shorting 110, right? That's what you're doing. If you're shorting 110. That's all you're doing, right? But if you are longing it, you're doing this. You're looking, this is just a bear flag back in 110. But if you're longing it, you're looking to see, can we get the pullback to 104? That's your long opportunity number one. And your long opportunity number two, which is an even far better long opportunity is going to be a pullback to 99. If you pull back to 99, that's your secondary long opportunity. This is a far better opportunity. Why? Because you can see here a real pent-up demand here that has not been tested yet. So this is what I'd be watching out for, guys. 99 as my big level of demand. And sometimes, like, I love levels like this. The reason why is because when I have like an obvious psychological level here at 100, everybody's going to be longing 100, right? Now, what's going to happen is they're going to long 100. They're going to get stopped out as it pushes into 99, and we're entering at their stops, right? Around 99 is where we're entering. And the reason why is because most people are going to come in and say 100 is a level, but it's not. That's not really the level. That's just a psych level. The real technical demand here is here at 99. So if you're longing this, I would wait, right? I would wait for this to pull back further, back into our overextension levels, 99 and 104, and I'd just stay away from this chart for now, right? If you want to short though, you're shorting the bear flag idea, right? Bear flag idea under 110, looking for a downside move back into lows. That's what you're doing on the short side, okay? Let's move on. Let's go over NDX, NASDAQ. So NASDAQ is going to be, this is obviously, this chart is this NASDAQ index, right? The NASDAQ 100 index is going to be oddly similar. I want to see this to NQ. No, it's very different, right? NASDAQ, NDX, NDX 100 index. So interesting. Here on the NDX, I mean, obviously you have a double top here around 20,300. You can see that's the level, right? 20,300. You can see there's obviously a big supply here, and that's the level you should be watching out for, right? 20,300 all the way to this 20,002, right? That's your technical supply. And if you're looking for upside, you really want to see us get above this level, right? That's your pivot. Right? This is your moment. This is your inflection point, right? It's here, it's here, it's here, it's there, it's there, it's there, right? That's your inflection point. If you can get above that inflection point, that's where we can look for upside plays, right? So look for this to happen. If it does, that's your best possible upside play. In the short term, however, here in the NDX, you can see that we do have a level to watch out for, a gap below here, 19,600, right? 19,600 is your gap level. So if you're looking for long side trades in the short term, you're looking to see if we can maintain this level, right? These lows over here, right? If we can maintain, that's your long side trade here at 19,600, right? Not the most beautiful charts, in my opinion. I don't think I've ever traded NDX before, but keep an eye at this level, okay? Let's go on. B Cross. Thank you very much, B Cross. That is very nice of you. NQ. Let's talk about it. So NQ is going to be similar to that. It's going to be similar, right? But what I'd watch out for at NQ, of course, that 20,500, right, is the level we just spoke about on the NASDAQ, right? It's the same idea here, right? This is the same idea. 20,500 is a level we have to break above. If we can break above, that's where we get real free-flowing upside above 20,500, right? That's where you get real upside above this level here. If we can get real upside back into that 21K, that's what you expect, right? Above 20,500. And this could be a real nice post FOMC trade, right? Post FOMC, if you see us get above 20,005, that's your upside trade back to 21K, right? You have almost a 500 point move here above 20.5, right? This is exactly what you're looking for today's session. In the short term, however, you're watching to see, can we maintain above this low over here, right? 19,736, right? If we are above 19,736, really just this whole band over here between these Tuesday's highs back on April 29th, right? That consolidation highs here and these lows over here forming on that Tuesday session, right? If we can turn that into a low, right? That's your long opportunity, right? And that's interesting because technically this did pull back to demand, right? It's kind of quite interesting, but again, that's your level here on the NASDAQ chart, right? Let's go over Netflix, guys. Netflix. Look, my opinion here on Netflix. I feel like oftentimes my opinion on Netflix is just wait for demand, and I almost say this every single time. Are there opportunities in between now and when it pulls back to 1,065? Yes, there are opportunities here, but I would say this, right? The only trade I would ever take on Netflix right now is going to be this, right? That's the only trade I would take. And again, you can trade Netflix before then. You can trade downside if you want, right? There are ways you can trade this before my demand zone, right? Trading is not one size fits all, right? You don't simply just have to wait for my demand zone here for there to be a trade on Netflix. But for me, this is the only trade I would take in my system, right? I would look for longs back at this technical demand, and that's all I have here in Netflix's chart, okay? Guys, let's go over one last ticker of the day. Last ticker of the day is Meta. This is not a fun stock right now, to be honest. I feel really bad about this one because this looks bad. 580 demand zone below. You can see 580, 596 supply, and then above 596 supply 610. I have no good read here, to be honest. But what I'd watch out for is, I would say this. Your main focus post FOMC should be this, right? It should be these double top highs that came in on Monday's session, right? Watch 603. 603, if 603, 580, right? If it can break 603, look for upside back into 622. If we see downside, it's only under 580, back into this shelf below here, 557, 558. And that's your long spot. So longs off demand here, 558, shorts back under 580, and longs above 603. That's how I would trade this chart, right? I would trade it precisely like this. This is the only thing I do here. Longs above 603, back into 622, shorts back under 580 for a move back into 558. Guys, thank you all for joining in. FOMC's at 2 p.m. Eastern Standard Time. Protect your capital, guys. Protect your capital, protect your money, right? Today is about capital preservation. If you want to take trades before FOMC, do it, right? Don't be hesitant. Don't be cautious, but size down, right? And that should be your mindset going into our session today. Expect choppiness, expect range, and I'll see you guys all for live trading. Bye, guys.